back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, Persistent System, that's a stock in focus. It's reacting positively to a set of numbers. Rima caught up with the management earlier today. Mr. Kalra, he gave them a sense in terms of the way ahead. Let's hear him out.
A sharp drop-off that you're seeing is pretty much due to the seasonal furloughs that we see. If we look at the furloughs this quarter gone by, for the industry, it is a little higher than what it used to be in the regular terms. For us, the furloughs came in at about 1.5%, and it also contributes towards lesser number of working days in the quarter due to Thanksgiving, Christmas, and other holidays, both in India and the US. So overall put together, roughly about 2.5% is roughly the impact because of these, both put together.
So the one-off impact would be 2.5%. Are you seeing higher furloughs extend into Q4 as well, Sandeep?
Some bit of furloughs may extend into Q4, but not at the extent of what it was in Q3. So maybe in the range of about 0.5% to 0.75% may still extend.
And this is not normal, right? Furloughs extending into Q4, and even the quantum of furlough impact, 1.5% in Q3, estimated 50-75 basis points in Q4, much higher than normal, right?
Yes. So it is higher than normal, and it is not lost on people, the macroeconomic environment that we all talk about. The more we talk about it, everyone is trying to optimize and everyone is trying to deal with their own businesses. And the customers who have been there for us for the longer term, we have to work with them on optimizing their businesses. And if it means working with them on the furloughs, so be it.
Can you talk about your top client revenue contribution, down 12% quarter on quarter, 43% lower on a year-on-year basis?
So as far as the top client is concerned, this is a planned ramp down of certain product lines that we have been working on. And this started last quarter. If you look at it, there was a sharp decline in the last quarter. Part of it is the tailwind the headwind that we are seeing in this quarter. As far as the overall revenue from the top client is concerned, we are pretty hopeful over the next several quarters, we'll see a sharp reversal towards the upside in the top customer as well.
Has the top client revenues bottomed out at current levels of $19-20 million?
Yes, pretty much they are bottomed down at this level.
Can you explain what led to the drop in utilization, 230 basis points lower quarter on quarter? Was it purely on account of furloughs?
No. So the utilization, if you look at it, we have to break the utilization into two parts. We hired roughly about 3,200 of the freshers who we basically take about 6 months before we put them into the utilization metric. So they have flown into the utilization metric. Outside of the freshers, our utilization came in at 83.3%, which is higher by 340 basis points. Including the freshers, it came at 77.6%. So that is the fresher impact that you're seeing in the utilization.
Got it. And can you explain the improvement that we've seen in margins? What contributed to it?
So the improvement in margins is an account of a number of factors. So if I look at it on one side, you have the higher utilization that we talked about. So the lateral utilization that we talked about moved up by 340 basis points. We deployed a significant number of freshers. So please note, we have been talking about 3,200 freshers that we had hired over the last several quarters. This was the first quarter where roughly about 20% or more of them got to be billable. So from that perspective, that is a cost that was sitting in our books, and this became a very good margin lever for us. The other parts are economies of scale from revenue growth, as well as the dollar-rupee movement and the IP revenue growth that contributed to the other extent in margin improvement.
You started off by saying the current macro environment is not lost on your clients. Should we expect that revenues will continue to be under pressure? The deal wins that you've been clocking it could come down. Is there a risk?
So look, there could always be a risk, but just to give you some data points, if we look at our top 2 customers, outside of that, the top 50 customers grew at a healthy 7.7% sequential quarter on quarter and 53.8% year on year. As a company, we have clocked the highest ever bookings in this quarter, which is a TCV of $440 million. This is the first time for a company that is doing $1 billion revenue run rate. We have crossed 400 millions in total contract value. So from those parameters, we are pretty optimistic that the deal wins and overall the momentum that we have, despite the macro, will carry us well through the next year.
What could you end FY23 with, and any initial projections for FY24?
So I don't want to give you any forward-looking indications, but if you look at the run rate, we are at a fairly healthy clip And given whatever run rate we have, we will land up at least at 30% plus growth for FY23. And this is on the back of 35% for the FY22 part. And the order bookings are very healthy, and so the momentum should continue.
30% FY23 revenue growth, but in 9 months, you've clocked in 39% dollar revenue growth.
So I don't want to give you exact numbers. That's what I'm saying. We don't give forward-looking guidance. The least we will do is that much, and look at the order bookings. Order bookings are a leading indicator of what is to come.
Q4, how would Q4 compare with Q3? Better, worse, same?
The pipeline is pretty good in terms of Q4. And obviously, we have to let the quarter pan out. We are pretty optimistic about the order book for Q4 as well.
Okay. Margins at 15.4% is the best that we've seen in the last many quarters, in fact, many years. Could this be the new base you're working with?
So our aspiration is to stick to this, at least for the near foreseeable future. And as a company, our aspiration over the longer term is to take it up by 200 to 300 basis points.
And how long will it take for you to achieve your aspiration? 200, 300 from current levels would be 17.5%, 18.5%. When could you achieve it?
Over the next 2 to 3 years, as we look at the revenue trajectory, as the revenue increases, there's a benefit of scale. And also, as you mine your customers well, so if you look at our customer metric, 3 years back, we had roughly 50% of the customers at the level of $5 million plus. So we've gone from 17 to 34 over the last 3 years. And as we increase that metric, as we increase our revenues, obviously all of these pans out towards the economies of scale, giving us the margin lever as well.
Your billing rate has come down though, right, for the second consecutive quarter?
So the billing rate, again, if you look at an average, it is also impacted by the furloughs, as well as it is, impacted by overall, if you look at it, the number of working days in the quarter, also a mix of on-site, near-shore, offshore. So as we expand our operations in Mexico and Costa Rica, our on-site billing rates may look a little skewed towards the downside, as the number of working days were lesser and the furloughs were there. That also impacts the metric. But overall, we are pretty confident it is in the right direction and it is inching up.
And one final question on hiring then, Sandeep. Would your hiring projections have come down given the way the attrition has moderated and there is some uncertainty on demand? What would be the new hiring projections now for FY23 and FY24, and how would it compare with before?
Okay, so I wouldn't say there is an uncertainty of demand. As I said, this was a record high quarter for us for order book. There's a very good pipeline that we have, which should convert in the quarters to come. Now, if you look at the hiring, if you look at the metrics like utilization, on one side, we had 340 basis points increase in lateral utilization. We had significant amount of freshers being built. We are carrying an inventory of roughly 2,500 plus freshers who are yet not built. So there is a significant amount of inventory we have built up, capabilities that we have been training people on. And so we'll have to factor in all of this, along with the fact that attrition has come down significantly. So the need for hiring more to replace the attrition backfills, that has also come down. So from that perspective, the net hiring may come down, but overall, the demand trend is in a very positive direction.
All right, so a strong commentary coming in from the management of Persistent Systems out there. The stock, which was already doing well, has moved to the high point of trade after them having spoken about the outlook for the year. With that, we'll step into a short break. But as we do that, here's some important information for you, our viewers. Don't miss out on the 19 must-have stocks for 2023. Subscribe to Money Control Pro to get the full list.